Hello and welcome back to another video on how to secure yourself financially. So here what I'm doing is looking at the set.gov, specifically the section on beginner guide to financial statement. So the TLDR is financial statement. After all, they show you the money from the Cuba Gooding Jr. Immortal Lines. Show me the money from the Jerry Maguire movie. That's what financial statements do. They show you the money, and there are four types of that. Balance sheets show what a company owns and what it owns at a fixed point in time. Income statement, how much money a company made and spent over a period of time. Cash flow, how the exchange of money between the company and the outside world, as well as the statement of the shareholders. So it shows the change of interest over a period of time. So the balance sheet, in this beginner guide to financial statement, they only focus on the first three: balance, balance sheets, income statement, as well as cash flow statement. So the first balance sheet, the TLDR, it shows the company. It's a snapshot of the company assets, liabilities, and shareholders' equity. The income statement show you, or the bottom line of the statement show you if a company made revenue or not, right? And the cash flow report the company's inflow and outflow of cash over a period of time. And this is something important because company need to have cash on hand to purchase assets and to pay expense. So while the income statement can tell you whether a company made a profit, the cash flow statement show you whether a company generate cash. And this reuse the information from the balance sheet as well as the income statement, and it is made of three parts. So it review the cash flow from operations, financing, and investing, and at the bottom line you find if a company uh, generate or not cash. So the first is the operating assets, where now this, what it does is to look at the net income from the income statement and adjust or conciliate with the total amount of assets that was used or perceived from other operating activities. When I mean by that, other operating activities, so the most common operating activities is operating assets and liabilities. So where now assets or operating assets are uh, any things that a company owns that is important on their day-to-day business, such as inventory, accounts receivable, property, plant, and equipment, expense or prepay expense, such as premium insurance like life, that prevents the event of the policyholder's death, health for medical coverage, the home or vehicle as well, so to protect that in case that something wrong happened to that, as well as liabilities in long-term care such as nurse home care or home health care. Keep looking at the other expense, prepay expense. You have marketing, rent, software licensing, office supplies, such as paper or ink printer, and maintenance contract. And this prepaid expense is, well, money that you have to pay in advance for good or service. Another operating assets you have is the intangible assets. Very, very important. So here, these are assets that has value, uh, but they are not physical, such as patents, which provide exclusive right to creators or inventors to distribute and sell their inventions over a period of time, such as maglev. There is the Popular Mechanic has a very, very interesting website where they show you at least the top 15 license popular, the top 15 popular licenses. So I'm just going to mention four of them. Maglev, issued in 1969, where this is an electronic, let's see, Maglev, okay, the Maglev pattern from the Popular Mechanic here. No, 15 Popular Mechanic, 15 popular, 15 famous pattern. Okay, so the maglev of magnetic levitation is an electromagnetic inducing inductive. Okay, it's an electromagnetic inductive suspensions and a stabilization system for ground vehicles. Just to paraphrase this, well, an electromagnetic inductive suspension and stabilization system for ground vehicles. Also, we have is the GPS, which is a navigation system using satellites with passive ranging technique, issued in 1973. If I recall that, in 1974. Okay. Also, we have is the electronic device, as their patent name suggests, aka aka mobile or iPhones. Also, we have is the this was issued in 2007. We also have the CRISP gene editing issued in 2014. This is just a couple examples of intangible assets, particular exclusive or patents. Another intangible asset is copyrights, where now companies wants to distinguish from the competition through image, design, audio. An example is the Michael Burry famous quote like "Let's get ready to rumble." Then we also have is copyright, okay, exclusive rights to creator of original works to sell and distribute that over a period of time, such as Twitter, Netflix, Spotify. Trade secrets, okay, confidential data that the company used to gain some competitive advantage, such as process formulas and customer lists, goodwill, okay, the brand recognitions, reputations, and customer loyalty. And then once I look at those intangible assets, I keep looking at other operating assets like investment in affiliates, such as Joint ventures, where now it's a partnership between two or more companies that want to take or undertake a specific business activity, such as Crocs and Post Malone, right? Equity investment, where now a company may purchase significant amount of stake of the other or the another company stocks to gain influence and raise their voice in the another company operations decision. So here we have Berkshire Hathaway, led by Warren Buffett, which is a holding company, and holding companies are companies that engage to another companies through the stocks. So they don't exchange or they don't do direct business. Uh, so well, here they operate or they invest. Like Berkshire Hathaway invest in a variety of companies in sectors such as energy, uh, real estate, and retails. SoftBank, which is another holding or Japanese conglomerate that invests primarily in technology companies such as WeWork, Airbnb, and Uber. Alphabet, the parent company of Google, that invests again in a variety of technology companies through their venture capital arm called Google Venture, such as Calico for longevity. Also, you have is the now in private equity, such as TPG, Texas Pacific Group, where they invest in a variety of industry as well, real estate, retail, and home healthcare, as well as a Blackstone Group, where this is an investment firm that one of the most notable investments is the BES. And BES, okay, is somewhat a competitor on Khan Academy. So they are on the educational online platform industry. But BES is headquartered on Bank in yes, it is headquartered in Bangalore. Okay. Then I also look at other operating assets such as cash and cash equivalents like money market funds, which is a fund that invests in a very risk short-term product, and this is not considered a good investment for a long term. So these money funds invest in bank acceptance, which is debt from banks, certificate of deposit, certificate of savings issued by banks with short-term maturity, commercial papers, unsecured corporate debt, repo, which is repo from how do you say? Yeah, repo from what is this? So repo. So this repurchase order repo from Investopedia. Okay, repurchase agreement is a short-term debt issued by a for short-term borrowing for dealers in government securities. Okay, so the government issues securities to dealers, a form of short-term borrowing for dealers in government security. Okay, so you have repurchase agreement or repo, a short-term borrowing for dealers in government security. Okay. All right. So once I look at all of this operating or the most common operating assets, okay. Again, to make a quick recap, TL, the TLDR is the TLDR is inventory, accounts payable, property, plant and equipment, intangible assets, prepay expense, investment in affiliate, cash and cash equivalents. All right. Then I look at the operating liabilities, right? Where now this is the accounts payable, the amount of money that a company owns to suppliers and vendors, such as uh, raw materials, service, office supplies. This is usually a short-term debt, around 30 to 60 days. Uh, I also look at the prepay and accrue expense, which are expense that a company do in advance for good or service that has been received but not yet paid for. So examples such as wage and salaries, rent, utility bills, um, yeah, rent, utility bills. So then I look at the subtle difference, and this is important, the subtle difference between this accrue expense and the accounts payable is that, well, accounts payable is money that you own to the vendors and your suppliers, whereas the accrue expense are money that you own, uh, but not for vendors or suppliers, right? It's expense that a company involved to continue it is operating business activity. That's one of the reasons why it is called operating liabilities, right? Such as, well, from the company perspective, you have salaries, wage, rent, taxes, utility bills. And then I'll look at deferred revenue, which is money that you collect for future obligations to provide the good and service, such as subscription service, gift cards. Now, keep looking at another operating liabilities. Okay. Now that I understand that and I'm able to mention all of this, then I look here at the operating activities. Okay. Operating activities. All right. Uh, operating liabilities. Then I look at the income tax payable and the short-term borrowing. So income tax payable is money that you owe to the government based on how much revenue you made. And here, okay, this is calculated based on the company taxable income and the applicable tax rate. Okay, based on the company taxable income and the applicable tax rate. Okay, so example of income taxes payable may include corporate income taxes. Okay, which is a company generate taxable income. Well, the government requires you to pay based on a tax rate. Withholding taxes If a company has employee, it is required to withhold taxes from their salary and remit amount of government. So this withholding taxes. So when I look at here at withholding taxes from Investopedia, that's one of the reasons why a lot of people is like they don't hire or here is um, is no need to here there is no need to uh, well, as talking about the withholding taxes, right? So there is no need right now if you're going to make a business. There is no need to how do you say? How do you put that? There is no need that you have to hire for employers because ultimately, uh, not only that this is a liability from the company perspective, but also cannot make your entire business. Is, you can run a business right now by yourself, okay? Thanks to the internet, that this actually give us huge amount of access for that. And based on your outcomes and based on what you produce, well, now you can provide value to other people, regardless the the geographical locations or the language barrier, as well as you're able to talk the common language of business, English, right now. Well, and you can express yourself in a very professional manner. Well, it'll be good for you and for the client as well if they want to hire you. So, okay. So now, because looking at this, okay, withholding taxes. Again, this is one of the example of income taxable or income tax payable. Okay, income tax payable. Uh, Again, this is money that you own to the government. This is corporate income tax or money that you own based on how much income you made. Okay, you have to put just to put it in simple. You have to put it in simple terms. So, income tax payable is amount that a company owns based on how much revenue it made over a period of time. Okay, now there are several examples of that, such as corporate taxes, and it is based on the state, it is based on the city, the state, uh, in the on the US, right? All you have is withholding taxes, which is money that it did so the money that the company or the employee deduct from an employee's uh, that deduct from an employee gross wage and pays directly to the government. So one of these withholding taxes, okay, the whole purpose of this withholding tax, according to Investopedia, is to avoid tax evasion or to fight tax evasion. That's the reason of withholding taxes, to fight tax evasion, as well as the need to send taxpayer big, unaffordable tax bill at the end of the year. Yeah, how much tax should you have withheld? So who qualify for exceptions from withholdings? But in other words, that's according to Investopedia is that, okay? So withholding taxes, which is one of the example of income taxable payable, meaning money that you own, money that a company owns to the government based on how much money it made. And it is calculated is based on the corporate income taxable and the tax rate that apply. So one of the example is corporate taxes, okay, or corporate income taxes. Well, this is a money, and also I ask this, okay, money that you owns to the government based on how much money you made, or how much, yeah, how much profit you made based on the net income, okay. In the U.S. is until 2021. It is at a flat rate of 21%. Okay, this is a flat rate of 21%. Okay, so to determine the amount of corporate income tax owed, a company must first calculate its taxable income, which is generally it is revenue minus allowable deductions. But in any case, this is just going too deep into the rabbit hole, and I don't want that. Just want to know is one of the example from the income taxable from the income yes, from the income for the corporate no, from the income tax payable, okay, money that you own to the government based on how much revenue you make, okay, or based on the income you make after some deductions. Example is corporate income taxes, withholding taxes, which is money that a company retain, which is after all is that, or money that a company deduct from the employee gross wage, okay, yeah, withholding taxes, money that a company, or in this case the employer, okay, this withholding taxes is money that the employee deduct from the employee, okay, it's money that the money that the employee deduct from the employee's gross wage and pays directly to the government. The whole purpose of this, according to Investopedia, is to fight tax evasion, as well as keep regular or simplify things allegedly, uh, without having to pay a lot of taxes at the end of the year. Okay, as well as the need to send taxpayer big unaffordable tax bill at the end of the tax year. Pay as you go tax collection. Exactly, it's a pay as you go tax collection, meaning, okay, it's a pay as you go tax collection, meaning that whatever income you receive, you're gonna pay that, or your employee is going to deduct from your wage as an employee. Okay, this is withholding taxes. And then you have is sales taxes, which is money that you own to the government for selling good and service. Example here you have of sales taxes. There's no example here. Sales tax example. So, sales tax are money that you own to the government for selling good and service. Example is state sale tax, city or county sale tax on the U.S., value add tax. This is a very common tax on Latam. Okay, value add tax. So this is imposed on goods and services at each state of the production and distribution. Interesting. Ultimately, the full VAT. So ultimately, the consumer pays the full VAT, VAT. But each business in the supply chains collect and remit a portion of the tax. Interesting this. So even if, after all, this is a way of how government charge sell tax. Okay, sell tax. This is how government collect taxes from government that sell good and service. So you have state sales tax, city or county sales tax, value add tax, which is imposed at each state of production and distribution. Mhm. So the final consumer ultimately paid the full VAT, and each business in the supply chain collect and remit the portion of the tax. So they collect that and pay that to the government. Okay. Excessive tax, excess, or what is another name of this? No, um, mm, no. This is more like for tax gravamen. The thing is this un gravamen, excess in business, excess duty, excess duty. Okay, excess tax or to consume, excess tax or to consume. This tax is a specific good. Okay, this tax is for a specific good, such as tobacco, alcohol, gasoline, and guns. So the tax is typically included in the price of the item and is collected by the seller. Excise tax. Use tax, that is a tax on goods and services that are purchased out of the state or online and used within the state. Use tax is typically the same rate as the state sale tax. So you have use state, and this is typically the same rate as the state sale tax. Government and service tax. This is a type of sale used in several countries, including Australia, Canada, and India. Interesting. This is a tax on the value add at each state of production and distribution of good and service. So you have value add tax and good and service tax. Sale tax. Okay. 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 This was very enlightening. Completely. Mm-hmm. Okay. Mhm. All right. I'm just keep tracking at the local um, liabilities, operating liabilities, like this. Okay. Okay. All right. Okay. Cool. Cool. So that'll be all for this video. Take care. Bye bye.